The Hedgeless Horseman here. It's January the 30th, 2025. I guess it's technically still the 29th in NA when I'm doing this. First of all, thanks to the sponsors. In this video, I'll mostly be talking about a bunch of primarily copper explorers and primarily early stage copper explorers. So really the high risk, high reward kind of stuff. And I mean, when I was, trying to put this together, it's like, okay, let's do a video on some different copper, primarily micro caps, but like early stage, high risk, high reward stuff. And then I just get reminded, it's like every single one I'm gonna go through, I can see let's say bull case for. It's like, I should rather say, I think all of them are pretty cheap and provide favorable risk reward. And this is why, I don't have anywhere near as much money as I can use, let's say. Because there's so much stuff out there that I just think is like, I'm happily putting some money in. It's like I would want to buy more in every single holding I have at these prices. And I think like every company I'm gonna go through now, I have shares of. Some I might have mostly, let's say, warrants, but it's like exposure to, let's say. And yeah, it just goes to show it's a buffet out there, I was gonna say. And then the problem is like, yeah, I want to have more shares of everything, basically. That's why it's so fascinating when you see a bunch of people now who probably never. This is probably their first bear market if they're in juniors. They never really actually started or bought any sector cheap. Never really were a contrarian, and people are like scared. It's like, oh, they're praying, hoping, and whining that the junior stone are gonna go higher, but they're too scared to buy, and they're just basically holding on in terms of not selling. I'm the complete opposite. I don't have enough dry powder. As soon as I get dry powder, it's basically all invested within one market day, because there's so much stuff out there I'd like to buy. And even like the my more core positions, which are like, in my opinion, low to almost very, or let's say low risk, high reward. So these I'm gonna go through today are mostly high risk, high reward. Meaning it's like I don't really have a giant position or a big position in any one of them, but all of them are so cheap that, or either they're so cheap or they have so much potential. Whatever, it's like so cheap relative to their potential. That's like, if one of these work out, given the valuation they have, I mean, they can literally, if you hold them long enough, these could be like 10, 20, 30, 40, 50 baggers. What the probability of anyone being that, I don't know. Do they have a shot of becoming that? Yes, I think. I think it's much higher, at least, than what the market is giving them credit for. So basically, if we assume it's like, okay, 20% chance of success, and that's quite high in a high risk, high reward scenario, because let's face it, I mean, if there's 20% a chance of success to get a 20 bagger, I mean, that's pretty good. That's more than the reward is more than enough to offset the risk. And of course, like always, usually the cases are even better in a sense, from a risk reward perspective, if you wait until they actually make the discovery. So I will admit that I guess I'm a, I don't know if I should call it greedy, but it's like they are so cheap that I'm almost okay taking much more risk in a sense, because yes, In a lot of cases, you're actually better off buying post discovery, after the discovery hold. And what usually, let's say, I'm not going to say necessarily, kill people's portfolios, but a big mistake is that you actually, bet a lot pre-discovery when it's very high risk. Because you think, well, okay, if that's the case, I could get a 30 bagger if they actually hit. Whereas, okay, if you wait for discovery, you might get a, let's say, 10 to 15 bagger, but you'll have to pay up. So okay, you're giving away the, let's say, 20-30 bagger for quite a bit lower risk, and instead you have a higher probability of getting a 10 to 15 bagger. I mean, that makes a lot of sense. But again, some of these are just so, I think, cheap that it's like ridiculous. It's almost, yeah, I would say that they're so cheap that it might actually, it's probably worth it, in a sense, if you diversify. Anyway, yeah. So first of all, point is that this is why it's like there's so much stuff to buy out there. Not that I mean, a buy to me is something that is cheap, but given the risk profile, for example, it might be good with a 0.1% position, but it can still be a screaming buy in a sense from a, yeah, risk reward point of view if you're diversified. Whereas like other screaming buys, the ones with lower risk, and the ones I talk about often, uh, in those cases, I have much bigger positions. So you can have two buys, maybe two screaming buys from a risk reward perspective, but it might make sense to have, let's say, 5% in one and 0.5% in one, simply because of the risk profile. What is the chance or risk that you're actually gonna lose money permanently? That's I think the most important determinant of what position size one should have. Anyway, let's get to it. Well, first of all, I'm just gonna do my usual crypto bashing nowadays. I think the crypto bubble, the crypto mania. I mean, I think it's a good time or a good opportunity to learn about market psychology, and markets overall, and how people think, how people feel, how greed shows up, and how fear shows up, and all that. Because let's face it, I mean, we're kind of witnessing history. This bubble is so large and it's so crazy, given that there's what 36 million plus different crypto tokens created by now. So I mean, I don't know when we're gonna see anything like this. So you might as well enjoy it while it lasts, and yeah, try to learn something. I was gonna say. What is abundantly clear is like how the goalposts, let's say, have changed. This account, for example, which is incredible, is like over 1.6 million followers, and you can see the kind of, this is bullish, this is massive, and Bitcoin dumps. Bitcoin has seen. Let's hope this is not a fake out breaking. So it's basically. I mean, think about what's the value of the content here. It's basically uh, an account that has, well, at face value, from the tweets I've seen, no real deep. How should I put it? Insights, in a sense. Most of the tweets is just pure pumping, pure FOMO, trying to create FOMO. Basically, just buy, and that's the beauty of crypto, because there is not much in terms of due diligence to do with a lot of these. I mean, most of them are worthless. So, I mean, you don't need to read a 100-page report and the balance sheets and presentation and whatever, because most of them are jokes. Vast majority are jokes, or it's like de facto worthless. Anybody can see that. And even, I mean, in my opinion, Bitcoin, for example, I mean, there's a bunch of stuff underneath it, and there was a white paper, etc. But in practice, it's basically also just a giant trading sardine. So everything is just comes down to like everybody's trying to catch the next move up in whatever crypto is out there that's gonna go up. I mean that's basically it. So that's why it's. I mean, am I surprised? I mean, imagine if you had a junior junior mining account, for example, that just posted exactly like this. That everything's just buy, and it's like literally, worthless stuff you were kind of, promoting in a sense. I mean, you would never. First of all, you would never have 1.6 million followers because there is no one that has 1.6 million followers. But my point is that crypto is very appealing to 95+% of people who want to, let's say, speculate, because it's basically one giant casino. And you hear people and you read stories and you see, I mean, coins like Trump coin going up 8,000% in 24 hours, and every person on earth basically wants to get rich now, quickly, as soon as possible. And that's why it's like, again, so appealing. There's not much to do. It's like, I mean, this account, 1.6 million people is just following. It's like, it's gonna pump, it's gonna pump, it's gonna pump. Compare that to doing like tedious due diligence, digging into whatever. It's like in the mining space, for example. There's so much things that can go wrong, even at good projects. But it's like can have whatever bad management and vice versa. But in crypto, it's like it doesn't really matter. You're only betting that somebody's gonna buy it higher tomorrow. That's the only thing really. It's like flow of funds and all that. But it's like, so this tweet, for example, Bitcoin is pumping hard after Fed Powell mentioned Bitcoin. It's like caps lock in crypto in his speech, like pumping hard, plus 2.3%. Rewind the tape like 2-3 years when Bitcoin was at 15, 20, or 30,000. It's like pumping hard would be like 10 to 20%. And this is what I keep talking about. It's like you can see how, in a sense, tired Bitcoin is becoming, and nowadays it's like at 2.3%, like it was some large ship. I mean, if I was gonna say Walmart or something went up 2.3%, that would be kind of impressive. But it's like in the crypto space, these moves are, I was gonna say supposed to be much more than that. I mean, nobody buys these cryptos or Bitcoin uh, because they're excited by about 2.3% in a day. Even though if you would compound the 2.3% per day, you would be, I mean, I don't know how many thousands of percent that would be within, a year or two. It would be a shit ton of uh, returns. But yeah, I mean, it's just crazy. I mean, again, as I've said before, it's like I think if I had to guess, given how heavy it looks, and again that the goalpost, like people are excited about less and less and less. I mean, they're grasping for, yeah, more for straws to be positive. I don't think, and given all the news we've seen about Bitcoin and Trump and all that, that it's not doing better than this, then it's like that doesn't look really that great if I were a Bitcoin holder. Anyway, this is kind of interesting. Donald Trump Jr. 14.1 million followers. A must read for anyone looking to protect their savings and build a better tomorrow. Inside, you'll find straightforward, proven strategies to preserve your savings with physical gold. This, I think, is extremely interesting because we know that the Chinese government kind of encourages their citizens to buy gold, and I would just think that they want their citizens to build real wealth. Uh, and I mean, what's the reason for that? I'm guessing they might see, be seeing some chaotic times. Of course, it would be great if let's say real assets are undervalued and there's a debt bubble in the world, and you're basically getting your citizens to just cement, let's say, the wealth they've created in real assets, which might be very undervalued relative to the bubble in artificial assets, like crypto, for example. So I mean, China, I think, they banned crypto some years back, I think, and they actively encourage their citizens to stock up on a store of wealth. And to see Trump's son do this, I mean, of course, one could look at it in a way that's like, okay, this is might just be, but it's like, okay, they get a commission, like it's a way to make money for Donald Trump Jr. It's like, yeah, that's I guess a possibility too, but it's like I suspect it's more than that. Um, that is what makes it interesting. It's like it looks like maybe the U.S. is taking a page from China. That's like, hey, it would be good actually, especially maybe given, I mean, the U.S. financial situation, because so far the dollar is still king, and the U.S. is kind of bankrupt, but they can basically run. I don't know what the deficit is right now, 5 trillion per year or something. So I mean, if you could keep on printing, and even if, let's say, you're gonna be defaulting on your debt in the future, from a, let's say, a state level, but I mean, in the meantime, if you can keep the machinery going, without paying the tab, let's say, and you can get your citizens to buy real stuff, then it would obviously be better off post, let's say, the dollar demise. I mean, that's what I wish. You know, basically, I don't know if our Swedish central bank is buying gold, but I mean, if I ran Sweden, let's say, I would be like China. It's like, try to buy up as much real assets as I can all over the world, because when the tide goes out, the what's the saying? The chicken comes home to roost. Uh, there are haves and have-nots. So imagine that the dollar implodes, and imagine that all the U.S. citizens didn't have much in terms of real assets. They had all their savings in U.S. bonds or whatever, and it just and bubble stocks, let's say, and crypto, and that everything just implodes. How much real wealth do they have? How much store of actual value do they have at the end of the day? Compare that to a country that might have a similar type of bubble, but all of their citizens actually have some physical gold and physical whatever real assets. I mean, in that scenario, it's going to be the ones that have some real stuff that are going to come out better, obviously, because the ones that have their wealth in paper, just like in the Weimar hyperinflation. I mean, you get wiped out if you had fiat wealth, if you were a billionaire on paper. I mean, you didn't do any better at post hyperinflation than the whatever the I mean the shoe shine boy who had no paper wealth. So I just find this incredibly interesting, and especially given that it's kind of timed with, I think somebody tweeted that there's I think Basel III rules that are coming in, or going live on July or something. Was it July? Might have been July. Plus this tariff thing that's going on, and you can see basically. You can see basically. Well, here's the LBMA paper. The fact of halt the delivery of gold or defaulted, they're supposed to have 5k metric tons, but are waiting for yada yada. So it's like the Trump tariffs. So there seems to be a run on London vaults or Bank of England vaults, and I think also that there's a I think it was Eric Young who posted it, that there's some LBMA rules. That's quite interesting. Well, I can't find it now, I guess. But imagine, okay, what's going on? It's like you have the son of the president advocating for people to buy gold. You have some Basel III rules that I think might hit U.S. banks soon. You have tariffs that are coming up, and there seems to be a scramble to get gold from, I guess, from London to the U.S. before that. All of this is kind of happening around the same time. And as it says here, the way to withdraw bullion stored in the Bank of England's vaults have risen from a few days to between 4 and 8 weeks, according to people familiar with the process. Central bank struggles to keep up with demand. So I mean, they're emptying the gold in the Bank of England. And I've said this before. It's like if we're talking true blue sky in the gold space, at least. Because we know that the paper gold leverage is immense. I mean, LBMA, I don't know how, I think they trade like or over the counter, whatever you call it. It's like the annual supply or something is traded each day in paper, and it's underpinned by much more limited volumes in terms of actual gold that someone can actually own. So there's a bunch of IOUs, let's say 100 IOUs per ounce. So the interesting thing, of course, is when that actually matters. That it matters if you actually have gold and not a paper receipt that said you have a claim to gold, but you actually don't. I mean, when it actually matters, what's going to happen then? I don't know. But let's say, is there a possibility there something could happen where it's like it actually, I mean, they can't just have a market trading almost purely on paper? Yes, I think that's a possibility. That at the end of the day, there's going to be a big difference in, let's say, the value of holding a paper that says you should be able to get gold and versus somebody that actually has gold. And what if there is some kind of run? What do you do then? Let's say you can barely get any gold or silver because it's sold out, everything's backed up, and that's going to, of course, create panic. What are you going to buy? If you want exposure to gold, if you want to own gold and can't get gold or silver, what are you gonna do? I was going to say, if you literally can't get it, are you going to buy an IOU? Of course not. I mean, the run on the physical, let's say, is saying that paper gold is worthless in that sense. You can buy it in the ground. If you buy shares of a mining company or a junior, whatever, they own gold in the ground. They might be producing gold out of the ground every day, and you own that. You own part of that. You might be, I don't know what, let's say gold trades at $4,000, and now you can buy it in the ground for $50. Or in a producer, it costs a lot more than that. But still, this is if we're talking true blue sky, I think that's what could happen. That there is some kind of upheaval in the paper market, and there's a scramble to actually own physical. And when that runs out, what happens if a lot of people, a lot of money around the world gets scared and scramble to get exposure to the real thing? And the closest, if you cannot buy gold or silver in physical form to get it in your hand, coins, what do you do then? I think you would turn to the gold and silver companies. I think you would want your exposure that way, to get ownership of gold and silver in the ground. That's obviously, in my opinion, I'm much more comfortable with that than, again, buying some futures or whatever, where it's like, it says it has the name of gold and silver, but it's like in reality you don't actually own any gold or silver. When it comes down to it, you'll be settled in cash or whatever. So how strategic is that? Not really. But if There is a run on gold and silver. That means the value of every bar that a gold producer puts out goes up in value as well. That is again this is not something I don't think it's required. That's what I like about this bet on real assets right now. I don't, let's say in and I've said this before, in Bitcoin for example, it's like the upside case seems to be, well, if 2 to 5% of all the money in the world gets put into Bitcoin from the wealth managers, then we can see a 4 to 6 bagger, or 4 to 7 bagger, or 5 to 7 bagger. Well, that's a stretch to get a multi-bagger in that way in Bitcoin. It's like, okay, so I need the entire world basically to allocate 2 to 5% to Bitcoin, then I can have a multi-bagger. I mean, that's something that's literally never happened before in a sense. I mean, it's like it's overtaking gold as the whatever premier store of wealth kind of thing. That's a first time in history in a sense. If you don't count, the US dollars. And I mean, the factor right now, obviously, gold is underowned. But my point is, that's a goddamn stretch. So if I need a case like that to happen for me to have really, let's say, good returns in the next 5 to 10 years, that's not too appealing to me. Whereas like these juniors, for example, some of them might multi-bag or should multi-bag just to get to fair value. Some of them might make a discovery, and given the what the value of that might be, could go up 10, 20, 30, 40, 50x. I don't think it's even close. I mean, this is why I personally, if you know about the mining sector, if you understand juniors, if you understand price versus value, if you understand risk reward, I do not understand why you would put $1 into crypto, except for if you're very, very good at trading, let's say, or predicting uh, a pump, so to speak. Otherwise, I have no idea how you could justify or say that there's not huge opportunity cost to owning, for example, Bitcoin at this price. Because Bitcoin could literally go to like zero. It's been around for what, 14 years or something. Nobody has any idea how it will do in a real, uh, I mean, global crisis in a sense. We've seen what happened during the flash crash of the COVID flash crash. It went down 50%, but that's COVID flash crash. Uh, I mean, it recouped those losses quickly, as did the stock market and all that. So that was kind of a false break in a sense. That wasn't a real crisis from a financial markets perspective. And nobody in history has ever ran to Bitcoin when they're scared. That has never happened before because it's not been around when a situation like that has manifested. Or again, if we just look at the brief panic of the COVID flash crash, Bitcoin dumped by 50%. So there's no evidence. Nobody has any, I was going to say, muscle memory or anything like that, or any reference in history to point to say that, well, in chaotic times Bitcoin does well. No, it's never happened. And when we've seen glimpses of what could happen during what happens when a panic sets in, it gets absolutely crushed. um, so yeah, I guess my ending point is I'm actually very excited in the sense that there's so much. There's so many tailwinds that are just. I mean, there's a lot of stuff that can happen. Juniors could do multi-baggers to get to fair value. without needing anything to happen. It's like metals don't need to go higher or anything like that. Okay, some are just so cheap. Okay, that's nice. If at spot price or whatever, it's like, oh, if I can see some multibaggers just from sentiment returning, let's say, great. If I pick, let's say, good companies on average that can create value, then they might multibag without really having sentiment to get better. That's even better. And then you have or the potential that both happens, that the value of the company goes up plus sentiment goes up, and then you can triple that by the price of gold or silver, whatever goes up. So you can, again, it's like a multiplier on a multiplier on a multiplier, and then you have like the, I guess, uh, whatever, the highest blue sky scenario case, which would be, um, yeah, there's basically a run on physical, and people don't buy gold in the ground just because they feel like making a bit of money, but because of fear and greed, or the fear of need is the term I like to use. The fear of need. There's like literally something happens that you can't get gold and silver, and maybe that coincides with some really chaotic stuff going on in the financial markets, or something happens, who knows, and it's like people are scared and they want to buy gold and silver. They can't buy gold and silver in physical form, so they buy the next best thing, which is gold in the ground. uh, you don't know. I've never seen that happen, so I mean, the comics, for example, has been around for quite some time, so I don't know what could happen in that kind of scenario. But you can just imagine if all those multipliers happen, basically, that you have sentiment return, and I mean, blue sky from a sentiment point of view would be go from these extremely depressed levels to extreme euphoria, which, I mean, in that case, maybe an ounce in the ground goes from selling for $30 to selling for $600. I mean, just without a change in the deposit. I mean, I listened to someone who said that during the mania of, was it in the 70s or something, or maybe it was the 80s, that at some point in time, I mean, some gold companies, they they got more value for gold in the ground than the spot price of gold. I mean, I haven't really been able to fact check that, but this is coming from, I think it was that guy with Dundee. What's his name? Oh, Dundee Capital. Goodman. I think his name is Goodman. So imagine that would be obviously the most. I mean, then we're obviously talking beyond the bubble. There's like, I mean, imagine now gold is at 2,800 almost. Imagine gold in the ground. A junior that has, whatever, 1 ounce of gold is selling for 3,000 bucks. I mean, now you can buy gold in the ground depending on the quality of the gold, etc. Between, like, let's say 10 to $100. Imagine if that gold in the ground was selling for $3,000. I mean, it's just incredible. You don't even need, if that were to happen from these levels, if we go from this to that, you don't even need any. So I mean, that would be the optionality place, would obviously be the place to be in that case, because they don't even need to do anything. If you have 3 million ounces in the ground, you don't have to do anything. Let's say within 5 years this happens, and there was barely a management team that even did anything, so costs were low, so you're just sitting there, 3 million ounces, and it goes from whatever $30 to $3,000. I mean, that's just obscene, obviously. um, I'm not saying that's gonna happen, but I think we're in for some. The more people doubt that the juniors, for example, are ever gonna go up and the real assets are ever gonna get in vogue, I think it just means that the when it actually happens, and it's gonna happen, uh, that I think is the only thing we can be kind of sure about, that history repeats and rhymes. Uh, I think it's just gonna get bigger. The more, the longer this goes on, the longer the depression lasts, the longer the underinvestment lasts, the longer the other bubbles go up. I think it's just going to mean that when the revaluation, when the mean reversion happens, It's probably going to go past a mean reversion and might go, far above fair value, etc. I mean, going into bubble territories, because let's face it, that's typically what happens. The biggest bubbles tend to crash the hardest. The most depressed markets tend to have the biggest bull markets when it actually turns around. So that's what I think is going to happen. I don't even dare to really consider what the actual blue, like real blue sky is for gold, silver, and juniors. I think it's much higher than anybody dares to think about. And the best part is I don't think we need it. That's the best part. That's the best part from a risk reward perspective. Again, I don't want to need to bet on something that has never happened to happen for me to, let's say, have a good return. If I can just bet on a bunch of mean reversions happening, whatever, and if fair value and good due diligence could give me 5 to 10 baggers over the next 3 5 years, then we add the upside potential, like free optionality of much higher sentiment levels, much higher gold, silver, and copper prices, and even a bubble territory. And then that might coincide then with, let's say, a run on physicals. I mean, if that happens, I have no idea what could happen. Obviously, if you looked at the commodity divided by S&P 500 short, I think that's the one. It's like at the lowest levels it's been in I don't know how long. And if you're a part of one of those mean reversions, if you catch one of those bull markets, I think you'll basically, you should have returns that you would be happy to get over 40 years or something, or 30 years at least. So it's like you kind of need, if you catch one of those and you're actually positioned accordingly, I think you're set. I mean, you can't really ask for more, in my opinion. Anyway, it seems that I will be wrapping up this video. I was gonna go into a bunch of copper juniors, but instead this turned into a 37-minute rant on, let's say, blue sky scenarios for golden miners. But I think this is at the same time quite interesting. You kind of need to have a sense of greed, obviously, to be buying cheap or low, because that's what I mean. Why do I buy? Why do I not have a problem buying cheap, for example? Because I know what happens if you buy cheap. Every time my portfolio has had a big correction, let's say bear markets or corrections, the stocks in my portfolio gets very cheap. The portfolio goes down. Then I just buy. Sooner or later, they're not that cheap anymore, and then I make money. And that's happened in a cyclical sector forever. That's always going to happen. Basically, miners have never been overvalued or undervalued forever. It goes back and forth throughout all of history. And now we happen to have probably the cheapest levels for juniors that we've ever seen, if you relative to the value of gold, for example. So it's just crazy. So yeah, I'm at peak bullishness. Maybe they were a bit. Maybe they were even a bit cheaper, like the lows of 2024. I think we are in a bull market. I think the bull market started last year in the juniors. I just think it's so far been relatively selective. That's one good thing at least. We know we're not even. People ask me sometimes, when do you know how to sell? It's like I never know how to sell. It's like one of my brothers asked me. He said, I see gold at all-time high. I see, sentiment is kind of getting up there, and he's getting a bit nervous, and he's like, my problem is I don't know. He doesn't know when to sell, so he's basically more of a. I guess like, okay, now I've had some profits. Gold is very high, so I'm feeling like it might be time to sell whatever. And I don't have that problem, obviously, because I'm a stock picker. I'll sell the day I cannot find anything cheap. Now everything is cheap. Even if gold dropped $500, a lot of these units would be super cheap. So I'm not anywhere close to feel like it's time to sell, even though gold has been doing well. So it's like, am I that comfortable, let's say, chasing gold here? I mean, from a physical gold perspective, no, I mean, I probably should have more physical. I should have more physical metals, actually. But it's not like I'm looking at gold at 2,800 and saying, it's like, wow, that is dirt cheap. Oh my God, I can't believe it. Nobody's seeing this. I mean, central banks have been buying up a lot, and gold is still at all-time high. So it's not like I'm a contrarian in that department. But gold in the ground is a totally different story. It's a totally different beast. Gold in the ground has never ever been cheaper relative to the value of gold in the ground. That's why I'm not even close to selling. I mean, Jesus, there's who cares really about juniors so far? No one really. So I mean, if we're talking how much is there to go on the sentiment scale in juniors, for example, we're not even close to any meaningful top or like bubble type sentiment. I mean, people consider the 2016 rally, for example, which was epic from the lows. I mean, several hundreds of percent. People consider that to be a bear market rally. I hear the 2011 was completely different. Then gold was actually in vogue. I mean, I seem to remember that I actually, when I had no idea about juniors or anything like that, I just read that gold is going up every day, and I bought some like bull certificates with 3 times leverage and rode it for like 2 days and then sold. I mean, when I, who had no clue really about markets back then, if I'm buying 3 times leverage on gold, you know, word has gotten around that gold is doing well. I was able to get out with a small profit on that. I didn't really push my luck. I was just happy to, you know, make a few percent in 2 days. But my point is, are we anywhere near that? I do not think so. And this was, yeah, I think it was around maybe 2010, 2011 during the Greek crisis, the Euro crisis. But from talking to people who were around and were aware of the gold mining space, for example, it was completely different. That was like really euphoria. I think the conferences were packed. Everybody was talking about gold and gold stocks. That's the type of sentiment levels where a lot of people are already in, and especially dumb money. I don't think dumb money is even close to being in. I mean, you're seeing that people who are in this sector can barely get themselves to buy, can barely get themselves to hold on. Does that sound like, it's gonna be time to take profits? No. I mean, it feels like it's only kind of, the billionaires are pounding the table, and some of them, like Ross Beatty, who was saying that he had basically retired from investing in the space. He's a developer, as per his own words, in a recent interview, and he said, started even 2 years ago, and it's gotten cheaper since. 2 years ago, he said he couldn't help himself because he thought there were such big dislocations between the price of juniors and the price of gold and the value of gold in the ground that he couldn't help himself but to start investing in juniors, although he in his mind he was retired from that part of his life. So it was, and it's even better today. So it's such an opportunity that a billionaire can't help himself to go back and invest. And I mean, I share his sentiment. I've never seen this before. I never dreamed of being able to have an opportunity like this. But how many think like that? How many out there, if gold and silver is down today or whatever, and I mean, today, for example, silver was up 2%, gold was, I think, up a bit. A lot of juniors were down, and people are bitching and complaining. It's like, what is there actually to complain about? Yes, could it be a bit frustrating? It would feel good if you looked at your paper wealth and it was actually up. Sure. But make no mistake, if silver went up, all else equal, it should at least, I mean, most juniors don't have any silver production, so it doesn't really matter that much. But all else equal, the value of the company certainly didn't go down at least. And still prices might have gone down. What is that? That is an opportunity. That's a one-day opportunity. You could buy stuff that has silver in the ground or gold in the ground that went up in value, and you paid less for it. That's an opportunity. Does that mean, because they went down when gold went up on a day, does that mean, we're never gonna make any money? Is that a reason to get pissed off? No, I mean, if you buy more of what's gotten cheaper, you're just gonna make more in the end. That's why it's like in one sense, to be able to have these cheaper prices for 2 years is absolutely ridiculous. There is no excuse not to be fully prepared. And even Rick Rule said, no, I mean, that's very topical. I mean, he had a presentation, and the title of it, I mean, I don't think he came up with a title, but basically the title or the label somebody put on it was that there's no excuse not to make a few millions from here in the junior resource space. Think about that. The dips of 2020, the COVID flash crash, that dip was over in a month or something. Now we've had 2 whole years with increasingly cheaper prices on average. So there has been no like, I overslept and I missed the time to buy cheap. No, we've had all the time we have so far, and that can change at any moment. I mean, I told a friend, for example, who I'm helping out, it's like, buy some of these juniors, and he had some family visiting, and he couldn't do it, let's say, in 2-3 days. Some of the juniors I said he should buy, they're already up like 8%. And that might not sound like a lot, because 8%, they can go up and down that over 2 days or even over 1 day. The thing is, like, if you pay up 8%, and let's say you don't get a chance to buy them even cheaper, because let's face it, one day the bottom is in, and nobody knows the bottom is in, but it is in. And then let's say you don't buy it, it goes up 8%, and you're like, I mean, first of all, it sucks, obviously. You would have wanted to buy it a bit cheaper. But if you compare that, like, what can be missing out on in that sense is that if you bought something at, well, let's say you missed out on 10%. You bought it at $1.1 and you could have bought it at $1. That extra 10%, I mean, the returns from $1 to, let's say, $6, and then the return $1.1 to $6. I mean, that's meaningful. It's just going up in a sense the higher it goes. So you paid up 10%, but that extra 10% might cost you much more than 10% of leaving money on the table long term. So that's why I'm chronically paranoid about the bottom being in, and the somebody figuring out and actually puts in money that drives up these juniors, because I don't expect to ever see an opportunity like this. And just because it's gotten increasingly better for 2 years doesn't mean that, if you bought it 2 years ago, that means it wasn't cheap because it went lower. No, it just means the opportunity got even better and better. And one day the bottom is in, and you're not going to see such high expected future returns on your money for maybe at least 8 years. I mean, people say we haven't seen juniors this cheap relative to the metals for 40 years at least. So it might be 40 years until you get a next chance. So do you really need to be that picky? Like, I have to get the exact bottom. That's what's kinda I find a bit funny. It's like, it's an extremely cheap market, especially for above average quality juniors. And a stock is trading for whatever, let's say 25 cents. And you're sitting there, it's like, I'm putting in my bid at 23 cents. I'm not gonna buy this until it doesn't, if it doesn't go down to 23 cents. In reality, that stock might be worth $1, let's say. I mean, if you have a bunch of stink bids in like that, so it's like, well, the opportunity cost is not that big because you're gonna get filled in something else if the 23-cent scenario doesn't actually manifest. But at the same time, that's extreme greed. I mean, if you're buying something for a 75% discount and you're not okay being even, hitting the ask or putting in a bid near the last trading price, that you're only going to buy something if it goes down to 23 when it should be at $1 and is trading at 25. Let's say you don't buy it. Let's say you don't buy any junior because none of your stink bids hits. What are you going to do when that junior is up to 40 cents? My point is, I don't think you need precision. I don't think you need to have the perfect buys at a time like this when stuff is so cheap. If you're now I've said this before, I mean, people think that they don't have any good long-term results because they don't tick the bottom. Couldn't be further from the truth. Or actually, let's do First Majestic. And I'm not advocating for First Majestic. I don't particularly like that company. It's more of a, in my opinion, a pretty poor long-term business. Yeah, but anyway, my point is, like, look at these rallies. If somebody thinks that the reason they can't make any money in this sector is because they bought there, sat through a 30-40% correction, didn't buy there, I mean, then you're kidding yourself. Then you're absolutely kidding yourself. If you bought at any point in time within that circle, you would have made a lot of money. If you bought any point in this circle, and this is 2013, 2014, 2015, you would have made money on the next swing. Here you had 2016, 17, 18, 19, then a flush in 20, but at least this is like 2-3 years, would have been much higher in a couple years from that. This dip here. So my point is, you don't need precision at all. So it's like, you don't want to be the person that's like, oh, the sector is down here and I have stink bids here, like ridiculously cheap, and you're always like, no, I'm not gonna buy when it's like absolutely mind-numbingly cheap, and you're gonna have a bid in here. It doesn't touch that and goes on a rocket ship. So it's like you lost out on, because you didn't buy here. When are you gonna buy? If you're too cheap to buy here, are you gonna buy when it goes up? When are you gonna throw in the towel? Is this, if when it breaks here, is this when you accept that it won't go in lower? Okay, well then you buy here. Then you have, if you would top tick, you'll get 100%. If you just bought anywhere close to here, 500, 400, 600, you get my point. I mean, there's a thing, to be too greedy is also really, really, really bad. And believe me, the reason people don't make any money in this sector is not because they don't buy this point, that they don't buy this point, but they bought this point. No, it's because people buy up here. Well, let's put it like this. Buy up here. When it goes down to these levels, they stop buying, and most of the people sell. I buy high, but I buy low. I'm much better at buying low than selling high. And the thing is, with this sector, look how long the bottoms are. The rallies can be, as we can see, extremely short in time. The bottom grinds can be like years. 2 years, 3 years, 2016 to 2019, then another dip. And I mean 2 years ago again, when we were like what, here or something, that's when Ross Beatty thought, oh, this is too cheap, I gotta get in. And then 2 years later we're basically at as cheap of levels, and especially for gold units, gold is at $2,800. So we've had 2 full years of buying the cheapest juniors this sector has ever seen in 40 years. How on earth is anybody expecting to, how are you expected to lose money in a sector when you get 2 full years to position yourself? 2 full years of like, hey, I do some monthly buying. You average down. So you had 2 full years of like loading up at ridiculously low prices. Who cares if you're down 50%? Is that going to be a problem when you go from a low to a high? Absolutely not. But all this the crypto mania has totally distorted people's perception. I mean, you look at some of these crypto accounts, like this guy with 1.6. I mean, I saw him talking about, it's been a brutal time in Ethereum or something like that. It's like, let's look at Ethereum. So from the recent top, 2000, that's like 1.5 months ago. But that's how it is. People, I mean, you could I'm not gonna say it's exactly. I mean, silver is much more brutal in a sense. I mean, one could say it's like, yeah, this top is 2021, silver is in 2011. But that's the thing. It's like crypto has totally distorted people's expectations or people's grasp on what is actually, I don't know, sustainable returns. If I said to someone, hey, in this stock you can get 50% over 12 months, nobody would be interested in that. Even though that would be world-class compounding, nobody would be interested in that. People are interested in cryptos because they can, select few pump coins or whatever, can go up 1,000% in 3 months. That's what people are. So that's why it's like, what are these people gonna do when the crypto bubble implodes? This is all they know. Greater fool trading, extreme volatility, and they were a part of the biggest bubble. So they were able to make money, some of them, very few of them. I mean, somebody said that 0.4% of people make money on meme coins. So it's like, let's say there's a few people who make a lot of money, but everybody, that's why this guy has 1.6 million followers. Everybody and their mother likes the idea of easy money. Quick, easy, big time money. That's why this bubble has just grown and grown and grown, because there's been new coins and new stories, and that plays into everybody's, most people who can't invest, and I mean, less than 5% beat an index over the long term, so it's appealing to 95% of people who have no idea how to invest, so there is no plan B, so they get lured into, let's say, crypto, because why not? I mean, it's like a casino. If when the crypto sector dies and 99.9% of all 36 million coins go back to their intrinsic value, which is zero, what are these people gonna do? I have no idea. But I think it would be better to learn how to invest, and especially learn how to invest in miners or real assets that are the cheapest they've been in 48 years. Yeah, long rant. Anyway, thanks for listening, guys. Not investing advice. You don't have to. If you like crypto, buy crypto. I'm just thinking out loud. I do what makes sense, to me at least. I think that's again common sense and patience. I think those are the most underrated tools in investing, and it's been getting extremely, sparse in the markets of that lately. And of course, I showed you a couple of videos ago, or a few videos ago, that the time horizon for investors have never been shorter. So patience and a longer term horizon, meaning you build your cases on not what you think a stock is going to do over the next 1 to 3 months, but what you think it might do over the next 12 to 36 months, then you have a really big edge, because none of that will be priced in. I mean, I don't think a lot of news that's 3 months out is priced in. And again, that's the beauty of time, that if you're buying something because of what's going to happen, well, let's put it like this. Let's say you have a bunch of ideas that there's going to be news like this that you can see, and to you it's material. You include that in your case. The news you expect to happen over, let's say, 3 to 12 months from now. Okay, the market doesn't care about that. Nobody in the forum is talking about that. Nobody's making you pay up for it. It's not priced it's not priced in to the stock right now. Why? Because it's, too far out in the future. If somebody thinks there's a positive thing coming in 4 months, most people will not be buying that stock today. When will they be buying it? Maybe a month before it, let's say, a probable positive catalyst might come, so price goes up then. And the more if you see 4 different, so it's like, again, you have, well, it's probably better to do it, because it's like patience is more exponential in a sense. Let's do it like this, so nobody cares. All of a sudden, the closer it gets, then people start care, okay? Then you have some other news. Then let's say there's some profit taking, because like this news release is 4 months out, let's say, from this one, so people get bored again, so it sells off a bit. But then it gets closer and closer and closer. When it's just 1-2 weeks ago, or 1 week ago, or 1 day, or 1 day left, then people will care, so price goes up. And then this just kind of repeats itself. People get bored again because the next catalyst is a few months from now, and then yada yada. The thing is, nobody cares about these today. That's why, again, why there's such an edge of being long-term orientated. Because if your case is that, I'm going to hold this for a year, 12 months, let's say, and you have, your base case is that there's going to be 6 positive news releases. And they are too far out, because this, the market cares about this space here. The next, next 3 months. Okay? So nobody's making you pay up for this. In the eyes of the market, in the eyes of what Mr. Market is pricing in, there's 0 chance of this happening. But you know it's going to happen, and you know it's just priced in like it's not going to happen, because nobody dares to hold anything for that much of a time. So your base case is that, in 12 months, value is going to be up here. Obvious value, like tangible value, because your base case is that all of these news items are going to come out. And then obviously the difference is that the price you pay today to the value in the future. So this case, let's say that is going to get you 78% in 12 months, simply because you try to figure out, you made a guesstimate what you think the news is going to be, what the value could be, and in your guesstimate you think that, the obvious value is going to be higher than the obvious value is today in 12 months after these news releases happen. And the market is not pricing that in. You're not paying for this. In the eyes of the market today, none of this is going to happen. But it does happen, and you have these kind of revaluations, because this is again most sentiment and impatience, and of course sometimes if it's a very probable news release, let's say, or positive news, it might overshoot going into it. So then you're going to have even more of a drop off because hot money is in. Then it's going to go down, and then people who bought here are going to get pissed off as per usual. It's like, well, this is good. Why is the market not? Well, everybody knew it was going to be good. So then it goes down, and people think that, well, this news didn't matter all of a sudden because the price is going down. So then they sell out and try to find the next case that's actually going up, where it is, quote, working. So they sell, whereas like the person who knows how the average investor acts and realizes that this was very tangible value, and sure, it might have gone above it, but then it dipped below it, and then you have these catalysts left, so you're buying this dip, etc., etc. I mean, that's my point is that I try to point out now and then. It's like you can't take the market too serious. Anybody's like, I hate the phrase the market is always right. In what time frame is it right? Does the market encapsulate all time frames? I thought the market was the marginal investor. Well, if the marginal investor has never been more impatient, if the marginal investor have never been more, whatever, uninterested in juniors, shouldn't that show up? Shouldn't it be much cheaper than usual? Shouldn't a longer term case have more payoff? Yes, I think all of that is true. So meaning that patience, looking farther ahead, you're investing not on the next news release, you're investing you're looking at this space in time. You're not valuing the company because of the next imminent news release here. You're factoring in these, because the thing is, again, with time, that it passes. In 3 months, this will be imminent. 3 months from then, this will be imminent. 3 months from that, so you're getting paid gradually, and that's what happens. How you get a 10-bagger. A 10-bagger is basically made out of holding through 30 news releases, let's say, or 40 or 50 news releases. That's the only typical way you get a 10-bagger. That it might take a company 3 to 5 years to come up with 30 to 50 news releases. So you have to hold them through all of that, because that's the only way you're going to capture the the time arbitrage and the patience arbitrage and whatever. A 10-bagger is not made from a single news release. I mean, not typically. A 10-bagger is made from tens of news releases that all add maybe 10-20%. Anyway, thanks for listening. Not investing advice. Consider me biased if I talked about any companies. Don't invest money you cannot afford to lose. All of that. Not buy or sell recommendation, yada yada.